Hello everyone, welcome back to the second lecture on the day trading. So this is the official second class of the day trading. Last time when I uploaded the video it was about the basics, but one of my relative came to me and asked me to make a video right from the scratch. So right now today we will be focusing more on how to get started with the trading. Like by started, I mean which softwares you are gonna use, what are the tools in the TradingView which are used in order to predict or speculate the market in your direction or against your direction, and how to get yourself registered on the broker to start day trading and also execute your first trade on the broker. So these are the topics that we will be covering today. So as always, my favorite pair is Nasdaq. I was looking at it today and yesterday from my analysis and speculations, I already marked my key areas, which was basically the weekly high and the weekly low. So the market was already in the uptrend on the 4-hour chart. So from here, it was, yeah, this is where yesterday opened. Like this is the opening price of yesterday. So this is where the price like around 1800 opened. Like for example, in the Asian session, it opened around this price. It retraced. I speculated that it is going to retrace back because this long extended move of the price was good to see. I knew that it is going to take out this liquidity, this pool of liquidity that is resting above these old highs. In order to take out this liquidity, the market was trying to reach out for it, but this overextended line or overextended price movement had to retrace in order to seek out the new liquidity. So this is what it did. It opened, let me just go to 15 minutes. So this is the Asian session. This is where the market opened. This is where it started, but this is in reality where it opened. It opened from here, it came right down, then go up, and then made a new low, took out this liquidity, which was the previous, the most recent sell side liquidity. So it took out this liquidity. I will just mark it. You can look here, right after taking out this liquidity, it made a sharp move towards the up direction. Why sharp move? Once I saw this specific candle on the 15 minutes time frame, because it took out the most recent liquidity of the 15 minutes. So from there I kind of knew that the market is gonna move above. Yeah, it is going to retrace a bit, which it did in here. Like here it retraced. Let me just scroll down. I think it's not clear in here. So it came down, and then right after that specific thing, it just shooted above. And this is where my targets were. I will just show you the live execution of it. Today, when the market opened, I was kind of bearish because the market was extended, and I thought the market might go towards this fair value gap, this specific fair value gap, and this one. But the market had other plans. So what I did, I closed all of these trades. I saw this move, like this specific move, I saw it. Why it's of great importance? Because it took out this liquidity. And right after taking out this liquidity, it retraced back to this small fair value gap. This is a fair value gap, right? FVG. So it retraced back to this fair value gap in here, and from here I kind of knew now the market is gonna go up. Why? Because it respected this specific fair value gap. And on this specific fair value gap, there is this liquidity which was taken out before, so it doesn't. If it moved beyond this fair value gap and made a candle right below it, so then my plans and my execution might have been different. But as you can see, it respected this area, so I just directly entered into the buy position, and I holded that buy position for up to this area, which was the previous day high. Like this is the previous day liquidity, so I holded it till this specific liquidity pool. Let me just go to 15 minutes. Yeah, so this was my target. This is where I got out from the market. This is where my, because this is what I wanted from the market to give me today, because if I was expecting a lot more than this amount, then that might have been a bit you know kind of, it could have been a bit greedy, and it might have gone against me, who knows. So this is the PNL of the last 3 days. On 26 I took 5 trades. Yeah, it was not a really good day because it was Monday, and on Mondays usually the market is sluggish, really slow. But against all odds, I still took trades, and I kind of had this 110 profit, but then I got out. I locked myself out. Today I will do the same. Then yesterday I took 16 trades and I got, I think, 1300 euros, $1300, and today I just took 9 trades. Here you can see the execution of all of those trades. These are the losses, which initially I shorted it. Means I sold it, but the market, as told you, it was bullish. So I kind of reacted rather than being predictive. So I just reacted to the market and positioned myself and got these longs and this profit on it. So this was the today's trade. This was the total breakdown of it. I told you that I always do the top-down analysis. Like I just go into the 4-hour and then I marked everything on the 4-hour chart. These are the previous highs liquidity. These are the previous liquidity. So from my current speculation, I would say the market is going to go up till here or till here, but still it might have been certain retracements and rebalancing might occur during the whole process. But the market overall looks really good. I won't say it's bad, but our from the looks of it, it looks really tradable, and it has a lot of liquidity and a lot of volume that is in the market right now. So it looks really tradable. So this was a bit about today's trade. As I told you, sorry, I'm just going off topic a bit, but yeah, I was going off topic. So now, as I told you, I look into the daily candles. These single candles means daily candles, because here the daily, I selected the daily, so all of these single candles represent the daily volume of the candle and the daily shape of the candle, right? If I go into the 4 hour, so now each and every candle represents the 4 hour candle. Like this is the 4 hour candle, this is 4 4 4 4 4, all of these candles are the 4 hour candles. If I go back into the 1 hour candle, so now all of these candles are now 1 hour candles, they are not 4 hour candles. Like these candles would be different, like look at it, this 4 hour candle is a bit bullish, And here we don't have this bearish candle. That there we have bullish, and here we have a bearish candle. This one, as I told you, this is 15 minutes. Each and every uh, candle represents the 15 minutes time frame. Okay, so yeah, this is a bit about basics. So okay, now getting back to basics. So how are we going to trade? This is the question I mostly receive. How to order, how to, you know, how to get into trading. So the first thing every beginner should do is, for example, is to open TradingView. TradingView.com. We open the TradingView. This is the chart. This is the depiction of the last uh, lecture where we marked each and everything for you guys. So this is the depiction of the last mm, lecture. Today we are on a new lecture which is about the basics. So okay, the basics include the first step every beginner should do is to come into the trading view. Once you are in the trading view, okay, what is the use of the trading view? Like why do we use trading view? Like you guys might be having this question like why are we have this trading view? Why most people use it? So I also had a similar kind of confusion when I initially started. I didn't know what all of these were because initially it's really overwhelming. It's really hard to understand. So, sorry. Why is it not? Okay. Okay. Yeah, now it's there. Why we use TradingView, view.com. Okay. This is the question first you guys are gonna ask. Okay. We use TradingView in order to mark our charts, in order to see the market movement, the price movement. All of these move shows how the price is moving or how the economics, macroeconomics is affecting the market sentiment. Okay, so basically we can kind of look into these candles using the technical analysis whenever we are speculating based on the candles. For example, if you are speculating the next move of the candle or the market based on the candle structure formed before, this is what technical analysis of a candle is basically in trading. So, for example, if I see this candle and I say, oh, the next candle is gonna be bullish and it is bearish. So, I did my technical analysis. How I did it, I would say, for example, oh, the market was really in the extended price movement. I made a really extended price movement, but it took out some liquidity. But in order to take out the next liquidity pool, which in this case here we don't have it, but for example, if for example we had a liquidity pool here, like this was the next liquidity. For example, in order to take out this liquidity, the market came below and then took out the new liquidity, formed the new highs. As you must remember from the last lecture of ours, we mentioned the higher highs, higher lows, lower highs, lower lows. So basically, these are the higher highs, higher lows, higher highs, higher lows, higher lows. These are the lower lows, lower highs, lower lows, lower lows, lower highs. Like it, you know, it kind of confuse. It is kind of confusing initially, but you will get hang of it with the passage of time when I'm showing it to you guys. Okay, back to the topic. TradingView, we use it for the technical analysis. Technical analysis basically means that we are predicting or speculating the next move of the candle, and based on that, we are positioning ourselves in the market whether we are buyers in the market or whether we are sellers in the market. Today, when I came into the market, my speculation was that the market will go to the fair value gap of the 4 hour, but it didn't move towards that 4 hour fair value gap, but instead it just moved into it just retraced a bit. For example, 30% it retraced, and then afterwards, after 30% of the retracement, as I showed you in the 4 hour candle, it retraced for 30%. Like for 30 by 30%, I mean like like 1 2 3 candles. It just made a 30% move below. Didn't came down to this fair value gap. This is what I mean by that, and it bounced back. Okay. So this is what I mean by technical analysis, okay? And this is why we use the trading view. Okay, so trading view is used for technical analysis of market in order to position yourself as a buyer or a seller, as I show you the example. Okay, I will not get into details because I then just go off track and just get into more details, and that is a bit of that is confusing for most, not for most people, but for the beginners, for initially for the beginners. Okay, so what do we have in TradingView? Always in the TradingView, what tools do we have? In the TradingViews, the first thing we have is candlesticks. Candlesticks. These are called candlesticks. The blue ones are called, the green ones equals to bullish, means market is moving up. The red candles or the black candles, you can by the way, you can change the colors of these candles. It is just for me. You can change the colors of it. You can change it from the settings. This is where you can change the symbols. This is for bullish, this is for bearish, so you can kind of change the colors from here for your candlesticks. Okay, so the black means bearish. Okay, bearish, which means down candles. Okay, the market is going down. This is what I mean by the candlesticks. Okay, okay, okay. Now to the second point. How do we speculate the market? We have different tools in order to speculate the markets. Okay, and how? So we have tools which are called Fibonacci, retracement tool. We have volume-based liquidity tool. Etc. What I mean by Fibonacci, this section of the chart or of the trading view has different markings. Like for example, this trend line, you can just kind of draw it in order to show you the trend line market is going up or below. Ray is also doing the kind of similar thing, but if you are targeting a uh, longer trend, so for that it's quite useful. This is information line. The information line kind of shows you, okay, how much of distance it covered, what was the price range, and yeah, it is kind of that. The horizontal lines, these are the horizontal lines which I kind of make. You can kind of change the, for example, the, the, what is this called? The width of it, let's just say, or the thickness of it. Yeah, sorry about that. The thickness of it, you can change it from here. Like you can mark it to 4, you can change the color to red, whatever, right? It just shows you it is really important for the marking your levels. This is how I've marked it here. Okay. Okay, sorry, I forgot to get a sip of green tea. These are also kind of similar, but I don't use them because to be really honest, I do not know how these works. I have used them in the past, but they were not quite useful. Okay, the second ones have this Fibonacci retracement, this Fib retracement. Fibonacci retracement is important because you can kind of predict where the market moved. Look at it. You mark it from here, the market retraced from 0.70 level and it come up. So you can kind of uh, speculate the market retracement. Like retracement means when the market is up in the very high, very extended price range, and then if the market is gonna retrace a bit, then Fibonacci retracement is really important for that. Okay, so Fibonacci, this is what Fibonacci is for. The fifth circle, whatever, these all are kind of same, but I don't use them to be really honest. But Fibonacci is what I use. These, as I mentioned, we have for the speculation, we have different kind of tools, like, and all of these tools are present here. But the only tool that I use here, it's the Fib retracement. Okay, yeah, don't confuse yourself with it. In this Elliott wave, some traders use these trading techniques as well. For example, it can be used like this, like marking every level, but it is not really helpful. Like for me, it's not. Okay, this is the long and short position. By long position, I mean when the market is going up and you want to, for example, you want to enter in here, you just kind of look into it. Okay, what is my risk gonna be and what is my risk to reward gonna be? So this target is basically, this is shows the target here, the percentage of it, how much of it, and how much amount you can earn, or okay. So this is basically the important part. To risk to reward. For example, if you enter the trade into here and your stop loss is here. For example, if the market goes against you, it is gonna look like this. Look, it's gonna look. If you enter in here and you speculate the market is gonna go up in here, but the market didn't go here, it retraced back and took you out. So this risk to reward means, like, if you have invested 100 euros and your risk to reward was 2 ratio 100, so if 2 risk to reward means that you have lost $20 if it hit this area of yours. You can change it, like, yeah, you can change it as well, but in this case we can just keep it to here. Okay, so if it hits this area of yours, you would lose $20, and you don't, if it doesn't come here and it just goes shoot up here, so you will earn $80. So this is what I mean by risk reward 1 to 2. Okay, no, I think yeah, if you are losing, yeah, yeah, it's kind of similar. So this is the long position. If you are bullish, if for example you are bearish, let's say you've speculated the market is gonna come below, so then it is the other way around. You, from here, you predicted the market is gonna go below, and this is your stop loss. Means if the market goes here, you are out of the market. You want your PNL, profit and loss, isn't gonna be affected. So if you speculate the market is gonna go below, so in this case, how much is this reward? Let's just check. It's 1 to 3. We don't want 1 to 3. 2 is a good risk to reward. Okay, so the market didn't go and hit you out. The market came down and the same. But in this is the short position is for the selling and long position is for the buying. Let me just okay, look at it. This green means the market is going up, so you are earning when the market is going up. This green in the down direction means that you are earning money when the market is going down. Okay, like the market is bearish. This is what I mean by fixed volume. You can just draw it like this in order to see if the market is overbought or oversold. So in this case, the market is currently on the weekly chart. The market is going towards overbought area. Okay, so overbought area, what I mean by that is when the price goes in the extended form for a longer period of time, then the market, this area is overbought. The area in here, this area, it's the overbought area, oversold area. Okay, this, when the market was in here, the market was in the oversold area. This is the market, like this line above this line, this blue line, market is overbought. Above, below this red line, the market is overbought, uh, oversold, sorry. This is the point of control, means this is where most of the trading happened, and this is the line P of point of control, means that most trading volume was in this specific area. Most participants were on this price. Okay, so this is how, like, some people use fixed volume profile, whatever. So this is, I'm just giving you a bit of details how everything is used. So now you are aware how to use the horizontal lines, Fibonacci retracement. Rectangle is used for marking the price areas. For example, how you mark it. Text, this is for, marking the trend line. This is also quite useful. I just kind of got it from here. You can also just select it and mark it, and then everything will be on here. So I don't want it. So yeah, it's removed now. So I think now you got a bit of understanding of why we use TradingView. Technical analysis, candlesticks we have, and we have some tools in here. And based on this, we speculate the market. Okay. So this is the basic overview of the TradingView. Okay. Now, what is this area? In this area, we can check what we want to trade. For example, if you want to trade stock, Tesla, you can just open the Tesla chart. So Tesla chart will be open from here. So it just really depends what we want, right? Tesla, Nvidia, some people want to trade Nvidia, some Apple, it's the stock. So you can just click on it and it will appear here, and from here you can just click on it, it will appear on this chart. For example, if you want to uh, let me just open the chart of the Tesla, this is the Tesla chart. So it kind of shows you how the market is moving, or the charts of the Tesla is moving. Okay, so then we have cryptocurrency. Some people are really fond of trading Bitcoin. So many people who want to trade Bitcoin want to make speculations on the based on the candlestick chart. So they can come in here and, yeah, select the chart. But the best chart is of Binance. So for crypto, for forex, it's Oanda. Really offer. It's a really good broker. So they have really good spreads. Then we have futures, Nasdaq, S&P 500, and gold futures. So Nifty India, Bitcoin. So it just, and then we have options when it's gonna. So this area is for marking what you want to look into. Okay. And some people also, sorry, I forgot to say, forex. Some people want to trade forex. So for forex, Euro USD, you can open the chart from here, and from here you can just speculate the market based on the technical analysis. Okay, this is the Euro GPY. This is the Euro USD and Swiss franc, and this is the New Zealand against the dollar. So okay, so this is a general overview about the trading view. Now, how I think for today it is enough. uh, Let me know what I should cover in the next video. I told you guys that I will be covering the broker, but right now I think I cannot show you that because the video is of 30 minutes already. So I will make the video, the second video, in which I will be showing the broker. But just for you guys, I think it differs from country to country. So in your case, I think you guys can get into eToro. You can make an account here, upload your documents, and from here you can, like trade. Okay, but for Pakistan, for subcontinent countries like subcontinent, so they can also look on the internet at which brokers are legal in their countries, and based in that, and yeah, one more thing, whenever you are looking into a broker, always check whether that is regulated or not. If it is not regulated, then doing trading on that specific broker is, I think, it will be against you. Like you will be provided with the worst spreads, and then that is going to affect your technical analysis. By spreads, I mean, for example, if the price is in here, and like for example, if currently a price is trading at 21441.7, but on the brokers it will be offered on 2144455. So this difference between this specific price and that one, that is the difference of the spread. And that sometimes affects you when you are trading, because here you do the technical analysis, and when you go there to execute, so the spread kind of, like because of that you kind of lose some money, or it's a hidden sort of charges. Okay, so always be wary of that. Okay, and be mindful whenever you are choosing a broker. So this would conclude our today's video. It was a bit long. I don't know how much I've covered in it, but I think if you look into it, you will get an idea of how this trading view works. The third video will be about the brokers, how we execute trades. So, like this one is also a broker. For example, let me just show you. No, but I don't want to trade. I will just show you an ineligible account. Okay. Let me just show you how I want, how I'm entering position. I think the market is gonna retrace a bit because it's a bit overextended. This is the fib retracement. It should come down here because there we have a fair value gap. From here, I think we can look. Uh, yeah, I think we can position ourselves here.
Order filled.
Stop loss should be here. This is the long position. My target is this area, and my stop loss is here. So I think 1 to 1 would be a good risk reward, just for the sake of example. Okay, let us now just observe how the market moves. Okay, so the market looks like mm, it got rejected in this specific fair value gap area because it came down. There's a market structure shift and then moved above, got retraced in here. Still, we are in loss. Mm. Whenever you are trading, it's kind of a roller coaster of emotions. So, I think, yeah. So let's see how we speculated this one, and we could be wrong. We might be wrong, or because it's just part of the game. Now, we are right in the profits. Right, baby. Just go. Mm, okay. So this is how you feel when you are trading. Sometimes you will lose. Sometimes you're gonna take huge profits. It can affect your dopamine level. Let me just give you example because it will be a bit boring, so I don't want to bore you guys. So this is the baseline of the dopamine. When you take a profit, oh, your dopamine level is here. When you take a loss, your dopamine level is here. This is the baseline where your dopamine level should be. So, why people say that whenever you take a trade, you take a profit, just get out of the market. Because it takes some time in for the dopamine level to come to the normal level. So you have to give it that time in order to normalize, so that your brain can make good decisions. Because whenever like I have heard it somewhere or read it somewhere that the human mind can make, I think, only one or two rational decisions throughout the day. So if you are trading, I think that will be tested. So yeah, back to the topic. So yeah, whenever you take a profit, your dopamine level is here, like it's through the roof. And when you take a loss, it's not through the roof, but it's just yeah, it's really bad. And whenever in that time, if someone calls you, for example, if whether it's at your family or whether it's your friends at this area, when they call you in this area, when your dopamine level is on this level, and someone call from your family calls you, so then you will be elevated. Your emotions will be really good. You will be feeling really happy, and you will enjoy the talk. But when you are at this stage, then you are not someone to be messed with, because you will be having, excuses and solution to each and every problem, but in an irrational way. Because you have already lost your money, and you made bad decisions, you were not confident, and now you want to impose that failure mentality onto someone else. You don't want to accept that you have lost, or accept that you have for example yeah, accept that you are wrong sometime. Because why this happens is when the market move against you and you still hold on to those trades, this is where it hurts you. And when it hurts you, you kind of question each and every decision that you have made. So yeah, this is basically the ups and downs of the dopamine level. So you should always keep your dopamine level on this baseline. Then your mind will function properly, and you will have a proper control over your emotions. So yeah, this is the trade that we took right now. You can see it's in the profit. I just executed right in front of you guys. There is no, like paper trading or whatever that is. Uh, but why I was so confident in this trade is because I already knew that the market is in an extended form. It has to retrace 30-40% as it's retraced here, and then it's gonna go up. So this is what it did in this specific case. Let me just see if we have what does our fib says. So look, it got retraced from this specific area of fib 0.70 level. Okay, so this is where the fib retracement comes in very handy, and you have to make sure that you know how to use it. Okay, so now you guys can see I will, this is basically loss, right? If I'm gonna lose, it's gonna be 160. If I'm gonna like take profit, it's gonna be 300 plus something. So let me just take it to the break even. Now if I'm gonna lose, I'm gonna lose 0 euro or a penny. I will be penny. I will not lose a penny. Okay, and this is what I mean. Sorry about my unstructured thoughts. Sometimes I just go and wander around in the Scottish island. Don't know what to discuss, which topic I was on. Sorry about that. So yeah, this is what I mean by the trading. You should know how to execute it. You should uh, have the patience. I think trading is really easy, but this roller coaster of emotions that you feel during the ups and downs, this is the hardest thing to master. Even after 2 years, I'm still struggling to master it or control it. Okay, doesn't look really good. Let me just keep it like this. Okay. Why? Why? Because that's the fair value gap of the inverted fair value gap. So you should be reacting to the market rather than being predictive. Okay. Imagine if you are in this trade and your money is on stake or at stake, what sort of emotions are you gonna what sort of emotions are you gonna encounter or are you gonna show during this execution phase? So yeah, it's easy to imagine, but when it comes when your true self really comes out on the charts, then you're gonna know, okay, how destructive your inner self is, how greedy you are, how not content you are with whatever Allah gave you, how na shukra you are, and simple words. So I think I will get out in here. Like I don't want to lose my money. So yeah, I speculated to go up. It just took out this liquidity and came back down. So it looks like it tapped into this fair value gap. So fair value gap and got rejected. So from the looks of it, the markets looks like it want to come down. This is kind of rebalancing. So I think I should get out with whatever Allah has given me. I think it will be enough. So this is how the live execution looks like. This is the let me just show you guys the reset layout. This is the order flow. The like the real participants. These are the sellers as a participant. These are the buyers as a participants, and on which prices they are participating. Like this is the prices. This is the volume of the people or the participants of the market. And like these are the orders that are here. So yeah, this is basically the order flow. This is where you just buy and sell, like as I showed you, buying and sell. This is where you change the contracts, how many contracts you want to buy or sell. And this is the time and size of the markets. Okay, these are your positions. Currently it's in PNL 150 profit. It can be shown here as well. So I think that is enough for today. I will close out the trade and let me just close it out. Mm, see. see.
Order filled.
Okay, so orders, sell, filled, bought, accounts, positions. Okay, so we are done with the execution part as well. I will see you guys in the next video, and if you have any questions, just let me know. If you have any uh, unclarity regarding any part of the trading, I will be getting into the details, but the thing is that you guys should also be a bit proactive and look for the things online as well. Okay, I will help you guys on this journey. I won't it is, yeah, but remember this thing: trading is really risky. It is really risky. Okay, bear that in mind, that it is really risky, and if you don't have money you shouldn't be risking that. The reason why I am doing it is because I have a income, stable income. I had a stable income, but I was still going through the phase that where I have to. I'm still going to through that phase where I have to borrow money from people in order to trade, because I still have this belief or faith that I will get profitable in by doing it. But I wouldn't recommend that to you guys. I would recommend you guys to first do the paper trading. And by paper trading, I mean you can go into the let me just show you guys so that you guys can have a clear. You just go to FTMO, you sign in, okay, and new FTMO challenge, free trial, FTMO start challenge. No, sorry, start free trial, okay. And in the free trial, get the account, whatever. I think I would suggest start from 25,000 or 10,000, okay, and then start free trial, okay. And then with that, MetaTrader 4, these are the brokers, okay. Well, I would suggest MetaTrader 4 because, or MetaTrader 5 and 4. I think they are quite easy to navigate and easy to understand. So start with this one, or start with this account size, or this. It is free of cost, okay. But only have to make a video. Make whatever. What is that thing called? You only have to register yourself, okay, on here. So just register yourself here and then get yourself this account and then trade with it, okay. I have failed so much challenges. Okay. So this would be it for today. I will see you guys in the next video, and ciao.